But we will begin the conversation with our stock of the day, and that is Lendlease. And now, one of Lendlease's largest shareholders came out urging the property giant to fix its, quote, bureaucratic, arrogant, and siloed culture. So this is a 7-page proposal that's been put to the Lendlease board by Tanarra Capital, as reported in the Australian Financial Review. Well, Tanarra Capital founder John Wylie has called the company, quote, a disaster, urging it to offload its entire international business for future success and the company's survival. Shares are up today by about 1% to $6.33, but I should say the A-REITs are performing well on the yield story today in particular, although they were one of the worst performers yesterday. So I will start with Howard Coleman from TeamInvest on this one. I mean, Lendlease is a stalwart of the Australian share market, but it has been through not just a transformation, but some trying times as of late. I think I was reading that Fin article. Its market cap has gone from $11 billion to where it sits today.
Yeah, in fact, it's surprising it hasn't gone lower, because the earnings per share have gone from $1.43 10 years ago to 10 cents per share today. So you would think it would have gone down about 90%. Mm-hmm. So the fact that the market cap hasn't gone down that much suggests there are a lot of fund managers who hold it because it's in an index. Now, that's the disadvantage of funds that track the index. They have to hold what we would consider capital killers. And this has been a terrible capital killer. To take your company from earning $1.43 a share to earning 10 cents a share on a steady downward path over 10 years, that's really disastrous. I mean, I totally agree with what John Wylie said. The only thing I'm amazed at is that they say these things trying to change the company. Why don't they just take the investors' money and put it somewhere else, which is the advantage you have as an individual investor or a fund that doesn't have that sort of a mandate.
Yeah, it's interesting because, there's lots of talk about, one of Lendlease's big buildings is being built right next door to us here at Barangaroo, it being more of a funds management business. So, if, which is not what's likely to happen, this is an investor getting quite vocal about it, but if it were, say, to divest the international part of its business, if it were to focus on bread and butter here in Australia and funds management as well, would that, in your view, if the business could be turned around, is it perhaps good value right now?
Well, management has demonstrated that they're not very good management over the last 10 years. So coming up with a new strategic plan would have to involve a new completely different set of management as well. Otherwise you've just got poor managers running a different plan. It's like taking a sports team that keeps losing and saying we'll change our game plan and now we'll win. If you've got the worst players, you're not going to win whether you change your game plan or whether you don't change your game plan. And if they're a funds management business, then they're a terrible fund management business. Fund managers should have return on equity in the 30s, 40s, 50s because it's not capital intensive. And they've got return on equity of 2s and 3s and 1s. So it's very hard to make a case for anything with Lendlease other than to say if you own any, take the money and do something more intelligent with it.
All right. Well, that is an avoid or sell, I'll call
Absolutely.
it, from TeamInvest. Let's find out with Grady Wulff and the team at Bell Potter think about Lendlease because, there is some potential for a lot of these A-REITs, to turn themselves around, particularly as interest rates go down. So as a sector, it's often be talked about as an opportunity in 2024. But does that apply to Lendlease in your view?
It does apply to the sector, but not quite Lendlease in our point of view. We actually don't cover this stock and don't have a rating on it, but looking at consensus and doing my own research into the company, it's one that I would personally, like Howard, avoid. It's looking at their past results in the first half. They actually dropped 16% in share price in one day. That was on the back of reporting a $136 million loss for the first half and downgrading guidance, which in this sector, in such a time when there is a serious opportunity, they they could really capitalize on this, but they haven't. And so what a lot of the commentary is saying and the market thinks about the company is they're good at putting money into projects, but not great at getting it out. So they do have their Investor Day and Strategic Investor Day in May. And so we'll definitely keep an eye out for that one and see what the update is there, if any, and what the strategic review, those words we hate seeing coming out of a company, but for something like Lendlease, it's something that you want to kind of hear. So we'll see what May holds for the company, but for me, it's an avoid at the moment just because its first half results weren't great. And for us in the REIT sector, it's Goodman Group is the word at the moment.
Okay. Goodman Group, industrials, you just were nodding?
Yeah, I mean, if we were going to be in that one, that's the one that passes TeamInvest filters, and there are quite a few TeamInvest members who do own Goodman Group. It's the only one that any TeamInvest members ever get enthusiastic about.
Okay, thank you. Guys, let's get on to the